Think about this when we talk CZTE. If you can contribute tax-exempt combat pay to a Roth TSP, that money goes in tax-free, it grows tax-free, and the qualified withdrawals in retirement are also tax-free. This is one of the most powerful wealth building opportunities that military service members have.
Welcome to the Military Money Manual podcast, where every episode is all about achieving financial independence in the military faster than before. We believe personal finance shouldn't be boring or intimidating. Building wealth can be simple, and financial freedom is the ultimate financial goal. Now, here's your hosts, Spencer and Jamie.
Hello, everyone. Welcome back to another episode of the Military Money Manual podcast. Spencer Reese here from militarymoneymanual.com. Today, we're talking about the triple tax benefits of CZTE. What is CZTE, you might ask? Combat Zone Tax Exclusion. It's a special type of pay that military service members receive when they're deployed to a combat zone, or if they even touch a combat zone for one day out of the month. We'll get into the details here shortly. But today we're going to talk about, like Jamie said, how it can put more money into your pocket today and in retirement. Jamie, I want to break down what you just mentioned there, the triple tax benefits of the CZTE. So number one, when a military service member is deployed to a combat zone, you pay no federal income tax on your military pay earned in the combat zone. Number two, you can contribute the tax-free income that you earn to a Roth IRA or to your Roth TSP, separate accounts, different limits. We have a podcast episode about that. And then number three, the contributions that you make grow untaxed. The dividends you receive are untaxed, and you can access them tax-free after age 59 and a half, or you can pass them on to your heirs after you die, and they can access the funds tax-free. So when people talk about building generational wealth, this is the perfect vehicle to do it. And when you're in the U.S. military, you have a very unique opportunity to access this triple tax benefit that nobody else gets access to.
It's pretty cool that we get that. And so the question might come up from the listener is, well, what do I do with the extra money that I'm getting? You know, if it was $200 or $300 a month or $400 a month that was going to a federal income tax, what do I do with that money? And so the first thing we'd recommend you doing is getting a good emergency fund. We've talked about this in a number of episodes to help cover you. And that might be 3 to 6 months. It might be more depending on your situation. It might be just your starter emergency fund. But either way, you should have a lot of extra income coming in during the initial parts of your deployment to fund that emergency fund. There's also a unique thing while you're deployed called a savings deposit program, or SDP. And that's a guaranteed 10% annual return on the SDP. And Spencer has an article about the savings deposit program on the militarymoneymanual.com. We'll link that in the show notes. So number one priority would be getting an emergency fund and or SDP up and running.
Number two would be contributing to your Roth TSP up to your match. So for military service members who are in the blended retirement system, that's going to be 5%. You want to make sure at least 5% of your monthly pay is being contributed to your Roth thrift savings plan, your Roth TSP. Now, Jamie, we're going to pivot a little bit here and say the next step is to contribute to your Roth IRA up to the max, which is $7,000 for 2025. It goes up every year, so make sure you just Google Roth IRA contribution limit for whatever year you're in. And then you can contribute to your Roth TSP up to the max, which is $23,500 for 2025. It's a bit confusing there, Jamie, because we're saying 5% into your Roth TSP, then go to your Roth IRA, then come back to your Roth TSP once you've maxed out your Roth IRA. I would simplify that system and just say whatever the percentage is, like let's say it's 15%, 20% into your Roth TSP, and then take your excess cash and throw it into your Roth IRA throughout your deployment cycle or throughout the year as well. That's the other technical thing here, is that the money is fungible that you earn in any tax year. So from January 1st to December 31st, it doesn't matter when you get the money into your account. If any of those months are tax-free, it's going to lower your taxable income for the entire year. Finally, the most advanced strategy would be going up to the annual additions limit, which is $70,000 for 2025. And we had an episode with Ryan Ganal recently where we got into the details of supermaxing your thrift savings plan while you're on a military deployment.
So people might be wondering, what are the combat zones currently and how do I know if I'm in a CZTE? from my bias as an Air Force guy, all of my deployments have been to a CZTE location. I know that's not true for everyone. And sometimes when I'm talking to a Navy couple or a Navy spouse, they may say, oh, my husband's going on deployment. What should we do? And I'm like, oh, immediately go into CZTE. But that's not always the case. So right now, the presidential executive orders determine the CZTE locations, and they live in IRS Publication 3, the Armed Forces Tax Guide. You can find them via easy Google irs.gov, and then there's a list of the combat zones. Currently, at the time of this recording, it includes locations such as the Sinai Peninsula, Afghanistan, Kosovo, Arabian Peninsula, lots of countries, everything from the Arabian Gulf, Red Sea, Gulf of Oman, including Iraq, Kuwait, Jordan, Saudi Arabia, Bahrain, etc. All kinds of options there. Lebanon, and a portion of Turkey. So that's what it is right now. And it should be pretty obvious to you when you know if you're deploying, whether you're going to a location or not, where it's a designated combat zone by presidential order.
The other thing here too is you might not get, in the Air Force, we call them CED deployment orders, even if you're going TDY to any of these locations. So like you might be going to a conference in Dubai or going to the Dubai Air Show. Dubai is part of the United Arab Emirates, and according to the executive order, it counts as a combat zone. One of the little nuances of Air Force pay is there's a base in Italy called Aviano. There's an F-16 unit stationed there. And there is a part of the sea in between Kosovo and Italy that is designated a combat zone. And oh, by the way, it just so happens that one of their training areas touches that CZTE area. So while you're stationed in Aviano, you can still get Combat Zone Tax Exclusion pay while you live in Italy. So that's a loophole right there. That,
as if that assignment wasn't good enough.
Yeah, it should probably be closed one day, but it's not right now. So take advantage of it.
And each of those locations also designated whether it's the sea, land, or airspace as well. Spencer mentioned a lot of it is just, it could be aircrew flying over Iraq on the way into a location that would count for the whole month. It could be touching down at the airport for a planning conference, for an exercise, that would count. So you got to look at that publication and determine, not just for deployments, anytime you're going to one of those locations where the CZTE applies.
Now, enlisted and warrant officers are going to get full exclusion of your pay, but for officers, it's capped to the highest enlisted pay rate plus imminent danger pay. So for 2025, if you look at the enlisted pay charts for a 40-year E9, it would be $10,336. So if you're an officer, you're going to get that amount plus imminent danger pay, which I think is $225, Jamie. You're going to get that amount excluded as tax-free from your pay. So what does that mean? So if you're paid above that, so let's say right now a 14-year 05 gets paid $10,300 a month in base pay. So that's pretty much the limit. So if you're above a 14-year 05, so let's say you're a 16-year 05, or let's say you're a 24-year 06, or if you're someone who gets additional pay, so like for pilots, you're going to get flight pay. The portion that's above that 40-year E9 pay, so $10,330, the portion that's above that 40-year E9 pay is not going to be tax-free. It's only the portion below that pay. So if you're like a 12-year 04 like I was, or I was stationed in UAE as a 10-year 03, my entire pay, 6 figures of pay, which is pretty crazy, was tax-free.
And it's amazing that the federal tax benefits of this, not all the states follow those rules, though. Your state tax may still be subject to the state income tax. So double check based on your taxes. A lot of states do mirror the federal. And you will also have the FICA, the Social Security, and Medicare still apply. So you will see some deductions, even though it's not income tax coming out of your pay.
Now, if you're a civilian, like a contractor, or you're employed by a contractor supporting U.S. Armed Forces in a designated combat zone, you might be eligible for Foreign Earned Income Exclusion, FEIE, pay, which could exclude, I think it's up to the first $140,000, $120,000, something about that. You have to Google it for 2025, but that's different than Combat Zone Tax Exclusion pay. So just look into that. Hopefully your employer will know, can give you some advice on that. But yeah, if you're a civilian, you'll have different rules around your pay in a combat zone.
Just a quick note from one of our sponsors, and we'll be right back to the show. Hey, Spencer, I've heard about this free Amex Platinum card for military service members. Where can I go to learn more about this?
Great question, Jamie. I've got the Ultimate Military Credit Cards course at militarymoneymanual.com/ UMC3. It's a 100% free email-based course, and I explain exactly how to verify your eligibility for credit card annual fee waivers with the Military Lending Act, or MLA, and the Service Member Civil Relief Act, or SCRA. The Ultimate Military Credit Cards course is a beginner's guide to travel hacking and opening up your first annual fee-waived credit card while you or your spouse serves in the U.S. military. There's no spam, no fluff, and the only emails you'll get from me are related to military credit cards. You can unsubscribe at any time, and there's zero cost to you to sign up. You can sign up right now for free at militarymoneymanual.com/UMC3. Again, militarymoneymanual.com/uniform Mike Charlie 3.
And now back to the show.
Now, when you receive tax-free pay, it'll be listed on your W-2, box 12, and it'll have a little Q code, the letter Q. And when you go to file your taxes, there's a place when you're filing your federal taxes on the Form 1040 with the IRS where you'll actually input the amount from box 12 with the Q code so that the IRS can keep track of how much tax-free pay you receive. Or it should input automatically, honestly, with the new software. And I'm looking forward to next year we'll have AI tax software, which will be hopefully even easier than it is today. But when you file your taxes, Jamie, you may receive a couple weeks or months after you filed your U.S. tax return, you may receive a CP Charlie Papa 04 notice from the IRS. So it's going to ask you to provide some documentation for your Q-coded pay on your W-2. I've got an article on militarymoneyman.com. Says respond to IRS Combat Zone Tax Letter CP04. You can Google that. And it's not an audit. It's not the IRS calling you a liar. It's just an automated system that kicks in every time that the IRS receives a tax return with Q-coded tax-free pay on it. Jamie, I think I got one every single year I was active duty and filed taxes because I pretty much hit a tax-free zone every year that I was active duty. So the easiest thing to do is save a copy of your LES PDF format every month. I just put mine into Google Drive or Dropbox. And at the bottom of your LES, it'll say Combat Zone, and it'll list the dates that you were in a combat zone on your LES. I've also responded to the CP04 notice with my CED orders. So it says, deploying to data mask location for these dates, and that's been sufficient. Or in the Air Force, oftentimes we touch combat zones just while we're on temporary duty, TDY. And so I'll provide my DTS orders with the CZTE locations highlighted, and then I'll just black out any information that the IRS doesn't really need to see. And if they want to know more, they'll ask. I've never had a follow-up. It's always just been, I think it's a check-the-box operation. Someone at the IRS has a duty by the rules that Congress has set down that they have to collect this data. It honestly probably just goes into a giant filing cabinet. Nobody ever looks at it. I had somebody the other day that was kind of freaking out because they missed the deadline. I think the best thing to do is just respond as soon as you can. And know too that if you don't even have to file your taxes by the deadline. If you've been in a combat zone, there's an automatic active duty deployment extension, I think for 180 days from when you return back from the deployed location. So just make sure you can Google that. You still will have to file your taxes. Let me make that clear. And if you owe money, you better pay it, or else you'll have some fines and fees probably. But there is an automatic extension for active duty military if you've been deployed.
Spencer, earlier you mentioned imminent danger pay. So I want to talk to the listener now about imminent danger pay and hostile fire pay and how those two are connected. It comes along with CZTE, I think, all the time, if not almost all the time. And I recommend you look up IDP imminent danger pay on dfas.mil if you have questions about it. But basically, it's $7.50 a day if you're in a threatening location, but you're not actually shot at or under hostile fire. If you do get hostile fire, someone shoots at you, or you're under a direct threat of the enemy, then you automatically get the $225 for the whole month. It used to be different. Doesn't matter what it used to be, but basically, to recap, imminent danger pay is a daily amount, $750 a day in designated locations, which usually if you're in a CZTE location, imminent danger will also apply. So just look that up before you go so you know what to expect. Hopefully it's part of your pre-deployment briefings as well. And then if you get shot at, to overgeneralize things, you'll get the hostile fire pay, $225 for the whole month.
Some common mistakes I see, Jamie, for people who are trying to take advantage of their combat zone tax exclusion pay is not adjusting your contributions before you head out to the location. So MyPay and TSP, it's just a bit slow. It usually takes a couple of weeks for the new contributions to kick in. So if you know that you're heading out on a deployment, why don't you make the adjustment before you depart? And then that way the contributions can start while you're deployed. The other one is especially if you're a high income earner and you've been contributing to your traditional TSP while you're on a deployment and you have artificially low income for that tax year, it probably is advantageous to contribute to your Roth TSP. So switching from your traditional contributions to Roth contributions. But I would say again, we've said this on many other podcasts, but for 95% of military service members, you're going to want to contribute to your Roth IRA and your Roth TSP. Another common mistake is forgetting about the savings deposit program. I know they've put a lot of restrictions in, so you can't start contributing until you've been in the CZTE location for 30 days. You can only contribute excess pay that you have. So if you're putting a lot of money into your TSP, you might not have a lot of excess pay that you can contribute to your SDP, but it is a guaranteed 10% a year, and it continues to pay you interest up to 90 days after leaving the combat zone, and then it automatically redeposits into your checking account on file with DFAS after 120 days after leaving the combat zone. It is a good program. It's a guaranteed 10%. You're not going to get a guaranteed government-backed 10% return on any investment. So don't sleep on the savings deposit program, SDP. Up to $10,000 you can put in there. That's a free $83 a month or $1,000 a year. And then finally, lifestyle inflation. You're making some extra pay, and a lot of people are like, sweet, that means I get to spend some more. And yeah, you can, and maybe you should treat yourself. But at the same time, it's a great opportunity to pay off debt, build your emergency fund, and take advantage of the triple tax benefits of CZTE pay, Combat Zone Tax Exclusion pay. I just want to mention a couple other advanced strategy, Jamies, before we let the listener go. While you're in a tax-free area, you may be able to convert your traditional IRA contributions, if you have made some in the past, to Roth IRA and pay very little or even no taxes on that conversion. That would be an advanced strategy. I have an article on that on the website. You can also do tax gain harvesting in your taxable accounts. So again, you have a very low tax year for income. It might be worthwhile to sell some assets that have gained value and then buy them back at the same price. And while normally you'd have to pay capital gains on tax on that increase in value, because your tax rate's so low, you'll fall into the 0% capital gains bucket.
Is there a wash rule limitation on that for rebuying the same like there is for locking in your loss?
No, because it's a gain. So there is no wash sale rule. Yeah, it is pretty cool. And finally, this is more relevant for on the enlisted side, but you can use your CZTE pay to qualify for Earned Income Tax Credit, the EITC. So do a little bit of research on that, see if that can be beneficial for you on your federal taxes. If you use any of the standard tax software, it should notice that and offer that option to you so that you can qualify for that credit. And any good CPA, especially one that's familiar with military tax benefits, and we'd recommend anybody over at the Military Tax Alliance, you can check out their website, and we'll have that link in the show notes. Jamie, anything else we want to cover about the triple tax benefits of CZTE?
I just want to encourage the listener. I know deployment can be a stressful time getting ready for it. There's lots of information, out processing. You sit through a lot of briefs, you update your emergency data, you update your will, you do all this stuff. And sometimes it can be easy to neglect taking care of yourself and your family with your financial planning before a deployment. So if there's one thing I want to leave the listener with, I would say to make sure you understand and create a plan to maximize the benefits that you're going to have while deployed. The nation owes you while you're gone. And so that's why you get some of the extra benefit while you're out there, fighting for freedom and the freedom-loving Americans. So don't neglect yourself as you go through all that it takes to get out the door to deploy, because there really are some powerful benefits behind the CZTE times in your career.
Thanks so much for tuning in to this episode of the Military Money Manual podcast. If you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This helps others find the show, and we really appreciate it. Thanks again for tuning in, and we'll catch you in the next episode.
The views and opinions presented here are those of the speakers and do not necessarily represent the views of the DoD or its components. Reference to any commercial products or services does not constitute DoD endorsement of those products or services.